If you find yourself struggling or plateauing in trading, it might be your psychology that's holding you back. Let me explain. In the book, The Psychology of Money, Morgan Housel wrote, "Finance is different. It's guided by people's behaviors." What did he mean by that exactly? Let's take a look at these examples up here. These were both mentioned in his book, The Psychology of Money. On the left-hand side, we have Ronald Read. He was a janitor who had an average-paying job, a calm, quiet lifestyle, and he made a series of smart, quantitative, gradual investments over his career into blue-chip stocks. On the right side, we have Richard Fusson, a Merrill Lynch executive. He had his MBA from Harvard. He retired at 40, and he was absolutely praised in his field for his knowledge and success. Okay? What happened to both of these people? Ronald Read passed away when he was in his 90s, leaving behind a little over $8 million compounded from his blue chip stock investments. He had left an amazing lifetime's wealth behind when he passed. What happened to Richard Fusson after he retired in his 40s? He was directly affected by the U.S. 2008 financial crash, and everything he had was gone. This man ended his life and ended his career with a little over $8 million from smart investments. This man over here specialized in smart investments for a career path, and he ended up with nothing. What was the difference between these two people? For starters, they're polar opposites. Ronald Read was poorly educated, he had a decent paying job, and he was just living his life. Richard Fusson was all in. He was an MBA of Harvard. He had an extremely successful career in finance, but one ended at the top and one ended at the bottom. Why is that? The psychology difference between these two, right? This man worked steady, honest, and hard and did nothing but stay consistent within his life, making smart investments. This man dumped money into his comfort in his personal life once he finished his work, right? He bought a house in Greenwich, Connecticut, and he started renovating that, but all his liquid assets that collectively built up his net worth were wiped, and he had to file for bankruptcy. This is the psychology of money. The difference of thinking between these two ended in completely different results, right? How can we consider this, and how can we use this to our advantage to trade, right? Look at it this way. If you think you know a lot about the market, you've been watching a lot of YouTube videos, and you think you have a firm understanding of what's going on, you are competing against the smartest kids from Caltech who are trying to squeeze some money out of stupid people. You are trying to squeeze money out of institutions who are trying to squeeze you. And you are trying not to lose everything in a game that's designed to take everything from you. Okay? One thing to understand when going into trading as a career path is that you will lose. That is 100% guaranteed. You will lose money. At some point, whether you're first starting out or whether you've started getting your psychology and your strategy together, you will lose money. There's something called the boom-bust cycle, where it's sort of like this parabolic curve, right? Let's take this right here as the zero line of this curve. So when you first start trading, you're getting good, you're understanding, your knowledge is increasing, and you're starting to make money, right? Then comes the overconfidence. You start to get overconfident. You start thinking you're invincible. You start thinking nothing can stop me, and if I enter a trade, I will not lose. And that's when we start to dip down of this cycle, when you start taking collectively more and more losses, right? Until you're eventually back at that 0 mark. And then you start to dip below and dip below. Revenge trading, trying to regain losses, ignoring setups, entering when you please due to emotional stress, right? And then you keep dipping lower and plateauing and dipping lower until the market finally humbles you, until your psychology shifts and you no longer think, I am this genius trader and I am destined to make all this money. That's not how this works. Once you finally get that smacked into yourself by the market, it starts to come up again, and you start to really look at the fundamentals, and you start to break down the technical side of your strategy. You review, and you journal, and you go for runs, and you let yourself breathe, and you really, really think about what is happening. That's when you climb yourself back up to this psychological 0 mark, right? And for most traders, this cycle just continues forever and ever and ever. Just dipping down, getting humbled, regaining yourself, coming back up, losing your head, losing where you are, not understanding your strategy or where you currently sit in the market, and then you come back down and face these losses, and then it's the revenge trading. This is the brutal life cycle of trading psychology in a negative manner. This is what happens when you have poor trading psychology. You are voluntarily trapping yourself in a cycle of emotions and losing money. If you want to be successful in this at all, you need to throw your emotions out the window. You cannot have emotions present within yourself while you are playing this game, right? Because what happens when you start to flood yourself with emotion? You lose track of the plan. That is the name of this game. Stick to the plan. It's as simple as that. You need to have a solid setup and you need to be deathly consistent, right? You change one thing about the plan and I'll adjust this other thing and maybe I can change this, and now you have a completely different plan that you built based off of a stupid intuition because of emotions, right? You keep getting these wins and you keep feeling gratified. Maybe instead of that 1-to-1, you hit that 1-to-4. Now all you target is a 1-to-4 risk to reward. And then what happens? You start to lose, and you start to lose, and you start to lose. And the cycle continues. You need to be the person to break that cycle of thinking, or it will consume you, and you will have no shot at doing this, right? Anyone can press a button on a screen. Anyone can buy. Anyone can sell. But it takes a smart trader to know when they can enter and when they can't enter. It seems like a very simple concept to grasp on paper, but when applying this to your trading psychology, especially as a beginner, it can be extremely difficult, right? You think you know anything. You've been watching all these videos about MACD and RSI and moving average convergences and, all these indicators and all this stuff, Hall Suite and stuff, right? And you see something happen. Say it's like one big candle on like a low time frame. You're watching that, you think, well, now because I've had X amount of wins and only X amount of losses, I must be a very good trader. So I can enter when I please because I have the overconfidence that nothing bad will happen. Because from the previous wins I've built up, I think that I know what I'm doing. That's not how this works. A lot of people, when they think of day trading, they think of sitting behind a computer 24 hours a day and seeing this move and entering here and moving this and entering here. That may lie true for momentum scalpers and, super low 15-second traders and volatility traders. Things like that. Okay, yeah, you do sit in front of your screen and you don't take your eyes off your computer for hours on end. But with this style of day trading, where you're entering on the 1-minute chart and holding for like half an hour, or entering on the 5-minute and holding for an hour or so, you need to have a consistent, precise plan that tells you set in stone when you can enter, when you can exit, when you can take a buy, when you can take a sell. Where do my parameters go? Where do I set my stop loss? Why do I set my stop loss this way? What is my conviction to enter this trade? And once you get that under a clear, crystal clear understanding that you need to be dead almost on the inside to do this, you need to be completely emotionless, right? You need to sit here and turn your brain off. That's why when you trade, people say you need to be a robot. And that stands true. That is very, very true. You need to have zero emotion in your trades, and you need to enter when you're supposed to enter and exit when you're supposed to exit. Sometimes people will enter and say, oh, I'm going to increase my risk to reward. I just really think this is going to go down. That is emotions-based trading. You cannot trade off of what if. You need to trade off of this is happening, this happened, and this gives me this entry point. Here is my entry confirmation after my entry signal, after all my required parameters are met. Then you can enter your position. For something as small as a single click of a button, it can dictate your entire career. It can dictate how much money you end up bringing in. It can dictate if you even end up bringing money in at all, right? It's all about how you view yourself in the markets, right? That is one of the most valuable lessons you can teach a new trader, is that you need to be robotic. You cannot have all these different setups and all these different time frames and, oh, I think I'll do this today. That's not how this works. You need to be a machine with this kind of thing, because you need to understand that much smarter people than you and very well programmed quantitative algorithms are trying to take money out of your pockets, right? If you want to have any hope at competing with these institutions and these banks and these genius kids who have nothing better to do, you need to smarten up, right? That's as simple as it can get. You need to smarten up, right? Referencing back to this up here with Ronald Reed, right? He was as smart as he could be. He was emotionless. He didn't have expectations of chasing these huge things. He didn't want these huge returns, right? He didn't have his entire mind and life set on making insane amount of money from his investments. He saw it as a smart way to place his money, right? He took the calm, cool, collected approach about investing, and he made enough money for his kids and their kids and whoever else to live on for a lifetime, right? If handled properly. But the difference over here is that money was the only thing in his heart and the only thing on his mind. Sure, you can have money on your mind, but when money is the only thing that fills your heart, when you have no other things to do when the market closes and you just sit here and wait until it opens, and you have no life and all you do is sit inside and watch the charts, money is in your heart. It's infecting you, right? It is stopping you from making calculated decisions. It is stopping you from living a healthy lifestyle that will lead to healthy psychology in trading, that will lead to higher returns and better setups, right? Like, it's as simple as that, honestly. Like, you need to get enough sleep to function properly. And the same can be applied to here. You need to get enough time away from your computer, time away from your trades, in order to function properly in trading. It is the work-life balance defined perfectly to financial markets, right? You cannot sit here for hours on end and expect good things to happen. You need to live your life with money on the side, not live with money as your life and your life on the side. That's not how this works. that will lead to failure like it eventually does for a lot of people, e.g. Richard Fusson, right? But Ronald Read lived a long, healthy life. He was happy, he was satisfied, and he beat the system. He beat the game. He made money off of investments. He was able to pull money out of thin air practically because it wasn't the only thing in his way. He wanted to live his life. He wanted to be happy. He enjoyed his job, right? And look what happened. Trading psychology can be one of the hardest things to understand, and trading psychology, more importantly, can be one of the most hardest things about this game to actually execute. Anyone can watch the market for hours and press buy and press sell, but who can actually find the balance between the two? Who can actually live their life? Who can actually walk away from their computer and shut their machine off after taking X number of losses? Who can call it a day after reaching X number of percentage gained a day, right? Who can be satisfied with not wanting more? That's what it comes down to. In order to receive more, you have to want less, right? It is a fine line between greed and ambition in this market, right? In this entire industry as a career path. There is a fine line between, am I being ambitious, or is nothing in my way from doing what I want to do? Am I going to sit here and stare at my charts? Am I going to sit here and grovel and cry over the losses I've taken? Or am I going to go get some fresh air and realize that this isn't everything, and read a book and eat healthier and work out, right? You cannot get better at this until you yourself get better. That's a valuable lesson that I've learned firsthand. You yourself need to get better in order to think more clearly. Okay? I hope this helped. If there's any questions, feel free to reach out.